Ask and you shall receive. A few days ago, I made a video reviewing Lilium stock, doing some technical analysis, and you really liked that video. You asked me to do technical analysis on Joby Aviation. So here it is. Well, not that, that's Lilium. But let's do Joby Aviation. There we are. Well, Joby Aviation had a very successful business combination, if you remember. The price reacted very favorably to the closing of business combination. On August 5th, SPAC shareholders voted on business combination and they approved the business combination. Business combination closed on August 11th, and as you can see, the price shot up quite substantially. I was actually very surprised that that happened. But those of you who traded that stock, you guys banked if you managed to sell it above $14. I think the reason the price shot up so much is because of all the interviews that Joby management had done that day. They went on CNBC, and they also rang the bell at the New York Stock Exchange. It was a big deal, or at least they made it a big deal. They also placed their eVTOL in the middle of New York. I think that was a great publicity, and the stock reacted accordingly. Now, I told you in previous videos that upon closing of business combination, PIPE investors are allowed to short the stock. And in volatile times, that is likely what they will choose to do in order to box their position. So, on August 11, business combination was closed. PIPE investors shorted the stock to box their position. And that was a very opportune time because the stock price was at around like $14. And that is why we see all that downward pressure on the price, right? The price went down to like $8.15 until it bounced back. So on August 11, PIPE investor could short the stock, but at that time they could not sell their position because S1 filing hasn't been approved yet. The S1 was filed on August 17th, which placed additional downward pressure on the price. As I said, the stock did rebound. I do not remember if there was any particular news that contributed to that rebound, but the stock went up as high as $13, let's say. But the following day, the S1 filing, which is registration of PIPE shares, it was approved. That's when the SEC gives notice of effectiveness. And that contributed to the downward pressure on the price. So after August 30th, PIPE investors, those who had shorted the stock before, they simply closed their position, and that has likely had very little impact on the price. But those PIPE investors rather waited until August 30th to start selling their position. That action had a serious impact on the stock price. And we see it here. The price, it gapped from 11.36 all the way to 10.55. But it did not stop there, it continued down. It did find support on that shelf. So let's call it a demand zone. We see it bounced at that shelf before, and then it bounced 3 more days at that same region. The price did recover a bit, but overall there is that long-term downward trend that the stock seems to be following. In fact, I should probably extend that line. Yeah, there we go. So basically this chart does not look too good. In fact, it looks pretty bad. It appears that this demand level will be tested in the next few days unless the price can break through that downward trend line. So that is the daily view. Let's take a look at the weekly view here. Yeah. So you see, the reason I said it does not look good because that is a descending triangle. That descending triangle is a bearish pattern. It's a continuation pattern. If the price can break through that demand zone, then It's hard to say where the bottom would be unless it can break through that downward trend line. So we'll find out in the next few days where the price continues. Now, on the positive note, SPACs seem to be waking up. I don't know if you've been following the markets today, but this one SPAC had some crazy moves. Yesterday, it traded under $10, and today, after hours, it is at $65. Yeah, this particular SPAC is linked to Trump. It appears that Trump is pursuing some social network and he wants to go public through a SPAC merger. So that SPAC was very popular today. And I also traded it. I actually tweeted about it yesterday. And well, let me tell you, I banked. I banked on this SPAC. It was some great action. It was by far the best trade of this year. Yeah, so make sure you follow me on Twitter because I do swing trading and day trading and I often tweet my ideas. So yeah, had you followed me on Twitter, you would have banked with me. You could have gone in at what, around $12 per pop. So yeah, follow me on Twitter. Yeah, so the good thing about that Trump SPAC is that it brings more eyeballs on SPACs. And if you recall, I believe back in December of 2020 is when that SPAC mania really began. And it is possible that we will see some uptick in SPACs again. And if that happens, these SPACs, such as Joby and Lilio, may also benefit from that hype. Again, if you're a long-term investor, then those short-term volatility should not bother you. If you are looking to enter, then as I said before, you'll have plenty of opportunities in the next 2-3 years to enter at a decent price. And if you are a trader and looking to trade the stock, then well, technical analysis is what you need. But at the same time, I will say that there are better stocks for day trading. I wouldn't necessarily trade Joby. Well, at least not yet. Oh yes, another positive thing. Those institutional investors and hedge funds that want it out have already sold their shares. If that slow bleeding to continue, it would be likely due to retail investors. Here is a list of PIPE investors from that S1 filing. Now, there are a lot of good long-term institutional investors, but there is also a fair amount of hedge funds that are in only for short-term, in my opinion. So keep in mind that this list is not up to date because my guess is that a bunch of these short-term hedge funds already sold their shares, they sold their position. But yeah, if you're interested, you can review S1 for yourself. All right, so let's summarize it. The stock is on a downward trend. It is reaching this demand zone. The price has bounced on the demand zone 4 times already. But now the demand zone is meeting the apex of the descending triangle. From a technical perspective, that does not look good. That is a bearish pattern. Joby can really use a tailwind now, be it in the form of increased interest in SPACs and de-SPACs, increased interest in growth stocks, or simply some good news like progress on the regulatory front, some new partnerships. But it definitely needs something because seemingly people are losing interest in this stock, at least for now. I'm almost certain that this will change the closer we get to start of operation. So if you're a long-term investor, be patient. All right, I hope you enjoyed this video. Write down in the comments below what else you want me to cover. And as always, feel free to like, comment, and subscribe. I'll see you in the next one. Ciao.